Hey, hi everybody. It's Bill Pauls here from Profits Run, and I want to wish everybody a Happy New Year and talk about the Washington soap opera continues. Now everybody's all excited that the fiscal cliff deal is in. Even the stock market's going crazy today. It's up big. But what was the deal? Well, the deal boiled down to two things. Increased tax rates, which potentially can generate $600 billion more in tax revenue over the next 10 years. Okay? Second, it delayed the across-the-board spending cuts that would otherwise have been implemented without the deal. But it only did so for the next 2 months. Now, that was the deal. Now, here's the reality. Zero spending cuts so far. And this whole thing is about the massive U.S. debt, or else there wouldn't have been a fiscal cliff situation in the first place. So it did nothing to address the debt on the spending side. Zero spending cuts. The debt continues to mushroom. 2013 maximum additional tax revenue. Maximum. $600 billion over 10 years, $60 billion this year. That's if it doesn't slow down the economy. When you increase tax rates on anybody, even though wealthy, that tends to break or slow down the economy, which you actually end up collecting less than you think. Of course, the government never tells you about that. But let's give it to them. Let's say they can get the $60 billion. So what's the impact on 2013? Well, the beginning government debt, as you probably know by now, started 2013 is around $16 trillion. Okay? That's almost 100% of the GDP, the gross domestic product of the United States, which is the sum total of all the goods and services produced in 1 year. Potential tax revenue increase for this year. There's that $60 billion. But actually in trillions, it's 0.06. That's how big that number is. Not very big, is it? And the current budget deficit for 2013, barring any other spending reduction, will be over $1 trillion. So by the end of the year, given the current fiscal cliff deal, we're looking at $17 trillion government debt, which is now greater than 100% of GDP. So this is what our great politicians have done for us so far in 2013. Now, what's the problem with this? The problem is this debt load severely weakens the economy. The economy cannot grow. As you all know, it's having trouble growing. Why? In large part because of this debt overhang. And they're not doing anything to address it. So the economy growth rate will continue to be low, slow. That means fewer jobs. That means the dollar will continue to weaken. That means we've got potential high inflation on the horizon. No one's talking about that. They don't want you to know that. But when you have this kind of debt load, despite the Federal Reserve's best efforts, we could be looking at massive inflation. Now, that massive inflation translates into a stealth tax. Because when you have massive inflation, even low double-digit inflation, the price of everything you buy goes up, of course. And that's like a tax on everybody in the entire country. Of course, politicians don't want you to know that. So, it's imperative that you break free of being a victim of this continued insanity in Washington. Take personal responsibility for your own situation. And learn to become a nimble investor, so that you can turn this whole thing on its head to your advantage. For more information, go to profitsrun.com, where you can learn how to become a nimble investor. Thanks for watching. This is Bill Pauls.